Hello, everyone. Welcome to Digital Wealth Frontiers presented by Gannett Trust. If you're here, you are probably a wealth advisor, work at a family office, a fiduciary, or an innovator in digital finance. We're here today to explore how to grow, protect, and reimagine generational wealth in the digital era led by Bitcoin. As a reminder for today, we do have quite a few panels going on. You do have to register for each panel separately. You can register for each one at GannettTrust.com. Just to give you a little bit of an event overview today, we are here live at Bitcoin Park in Nashville, and we have a lot of speakers from all over the country and the world talking with us today. We're closing with a keynote at Bitcoin Park as well. Why now? The financial architecture of the 20th century is being reimagined through Bitcoin, through programmable money, decentralized networks, and new regulatory frameworks reshaping wealth. Early adopters gain both asymmetry and wealth, and Digital Wealth Frontiers exists to help you lead the change and not follow it. Just to give you a little insight into Gannett Trust. Gannett Trust was built for Bitcoiners by Bitcoiners. It's the first Bitcoin native trust company. It's built for families, founders, and fiduciaries who understand Bitcoin. Services with Gannett Trust include qualified custodianship, inheritance planning, institutional trust administration, with regulated experience and built with deep Bitcoin fluency in mind. Recently, Sound Advisory, which was the RIA, Registered Investment Advisor of Unchained, became Gannett Wealth Advisors and rolled up under Gannett Trust. Providing financial planning and investment management services. Gannett Wealth Advisors and Gannett Trust are combining to form a complete ecosystem to help lead the charge into the digital era. Gannett's role is to pioneer the integration of trust law and digital sovereignty, supporting clients through legacy planning, corporate treasury, and family governance. Gannett's both a guide and a participant in redefining fiduciary practice for the Bitcoin era. Just as a closing call to action, again, if you're on this call today or if you're going to be joining one of the panels today, meet someone new, ask a hard question, leave with one actionable idea that you can roll forward with, because the frontier does reward participation. In the era of digital capital, legacy is not what you inherit, it's what you design. So with that, welcome to Digital Wealth Frontiers. We're excited for the day. We're going to kick off the day with RIAs as a pioneer in digital wealth. That's going to be moderated and led by Nick Bhatia. Sorry, Nick. And I'll kick it over to you now, and we'll get started.
Vaughn, I appreciate it. Hey, everyone. Thanks for joining us today. We are going to start this day talking about Bitcoin's transition into its role as a central part of the financial system. Whether it's the best money, the most durable money, the right asset class, what percentage the allocation should be, those are all questions that we'll be discovering both on an individual and a global level as we go forward. But we are in a transition stage. And the number one question that I get from current Bitcoiners is what they should be doing with it. And the people that aren't interested in Bitcoin yet, they need an avenue to get there. And oftentimes it goes through their advisory. So right now we have a situation in which advisories are starting to understand this asset class at different degrees. And that's where we are today. I'm really excited to introduce our panel. We're going to go around and just let each person explain where they come from in the RIA side of the business. And why don't we start with Chris?
Well, thanks so much. I appreciate it, Nick. My name is Chris Poch. I run Promethium Advisors in Bethesda, Maryland. I've been in the business for 40 years. I ran private wealth management, founded and ran it for Smith Barney City 20 some odd years ago. I've had a long career. Relatively new to the Bitcoin game in that I started investing in it, found out about 2017. And there was lots of problems running into putting it in client portfolios at various places. So I started the RIA, and I've been a big fan and big follower of Joe and recently Joshua and the Gannett team. So I'm looking forward to learning about all of this from the rest of the panel.
Great. Thank you so much, Chris. And also in Maryland is Matt.
I'm Matthew Grace. I'm a financial advisor based out of Bethesda, Maryland, right down the street from Chris, actually. I've been doing this about 18 years, and what I'm known for is working with business owners that are concerned about the amount of money they're paying in taxes and also estate taxes, and we help them plan to keep more money in the family.
Wonderful. Thank you so much. William is on the road in Virginia. William.
Hey, good morning, everybody. Sorry about my difficulty in late signing in. I've been in financial services now for 40 years. I'm working in the same firm with Matt. I specialize with high net worth clients, estate planning, and closely held businesses in making sure that we preserve our assets from creditors and predators. And we begin with the end in mind on finding out what our clients are trying to accomplish and how much control they want from the grave. And the products sit at the end of the boardroom table.
Wonderful. Thank you, William. And last but not least.
Hey, my name is Jim Crider. I own Intentional Living Financial Planning company located in Texas. We work with about 150 clients across the U.S. I started this company back in early 2021 after leaving another financial planning firm where we weren't allowed to talk about Bitcoin at all. And it plays a pretty centralized role in the way we approach portfolio management, tax planning, estate planning, and just generally everything comprehensive financial planning.
Thank you so much, Jim. Now, in our questions, we know that everybody has their own situation. So while we can't offer advice to, financial advice in this panel, we're going to phrase the questions in terms of, well, what are some of the better options for clients out there? And in that way, we let people go and ask their own advisors what they should be doing. But let's present them some options today. So let's begin with this idea of custody. A question I get all the time is, hey, I have Bitcoin. It's in Coinbase. What should I do? How do I bring it over to my existing RIA? And how do I explain it to my wealth advisor? What should my wealth advisor be doing for me on custody? So how do you guys approach this idea of Bitcoin custody? Matt, let's start with you, please.
Yeah. So depending on the client, right? The majority of, I think, everyone's clients that has been in the industry for a while maybe don't have exposure to Bitcoin. So there's the one level of there is that many people get the Bitcoin for the returns, then they stay for the revolution is one of the common tropes, right? So there's allocating for the purposes of growing wealth and taking advantage of the volatility inside of their total portfolio versus somebody who ultimately has already found Bitcoin, invested it, has it in cold storage. If they want to have advice on those individual components, I'm very wary of, bringing in a solution that isn't well tested. There's a lot of Bitcoin native solutions like Unchained and Caspa and other companies that ultimately, or when you're dealing with trustees that have those solutions and have thought through the logistics of it. And last thing you want to do is be responsible for somebody's keys and not have good redundancy in there. So I think that's going to be something that continues to develop. I imagine for a lot of RIAs, what will end up happening is partnerships with people who have already solved the technology and the contingencies that need to be planned for.
Thanks. And Chris, I wanted to ask you, someone who's been in the industry a long time, we have this new, within Bitcoin, this new boom in the ETF. So IBIT, FBTC, the leading two, but IBIT breaking all sorts of records. How are you thinking about the ETFs in the context of this custody question?
Yeah, it's a great question, and I think Matt covered it really nicely. I guess where I would add on is it depends on the client, right? Not everybody has cold storage. In fact, almost nobody has cold storage. What we did last year was we wrote an article, distributed to our clients, posted it. Rick Edelman asked me to put it up on his digital asset thing. And it talked about the fundamental use case, and it talked about cryptocurrency and mining, and laid out really what it is, just not something that you chase and go up. And I've been asked by several clients, a couple that have sizable cold storage, to be trustees or executors of their wills. And there's a real complex process about how to do these things correctly. when possible, I think you have to try to encourage clients to use companies like Gannett to help them make sure that they don't drop the ball or do the paperwork incorrectly. Most of the trusted estate attorneys really don't understand how to handle it or the complexities of the way it needs to be administered after the death of whomever is the owner. As far as the regular custody question, as was said earlier, most people know about Coinbase, but they don't know the pros and cons. They don't know the trading. They don't know the spreads. And for most people, it really doesn't matter. But I think as registered investment advisors, as we're helping educate people to understand the fundamental use case, the likelihood of it going up, and sort of the mathematical relationship between the price of the reward, the price of energy, the price of the computers to process it, I think our greatest role is to educate them. And just getting them in the game, getting them involved in any one of these ETFs at the traditional custodians is the right thing to do. And then as they become more educated, then we can help them understand the next gen and the incremental flexibility that a cold storage might have, or even more importantly, generationally, at a trust company that specializes in helping people understand how to do it correctly.
It's true that the lines between custody, self-custody, and traditional custodians is being blurred for the new entrants. And William, how are you thinking about that?
We used to have cold storage. My broker dealer is MML Investors, and we had cold storage through NYDIG. And you had to go through a lot of hoops back in 2020 because there was a lot of restrictions. And I'm a fiduciary to corporate retirement plans. And I took all of the classes, and everybody wanted to buy Bitcoin at 60 grand. And I said, let's just hold off, fellas, and let's wait, because there's been a couple of winners. And January came around, and I said, I'm ready to do this cold storage. And they said, well, we're now making ETFs available to you, and cold storage is no longer available. Consequently, one of my retirement plan clients had a lot of Bitcoin and wanted cold storage. I called the expert, Matt, who's on this call today, and he said, check out Unchained Capital. And that's when Joe went down and met my client, and hence the evolution of why I think that cold storage is far superior to having any other arrangement. And then it becomes who actually will execute for the owner in this cold storage account the wishes of the grantor, because most people are looking at it for multi-generational wealth. And I just finished a meeting where some of my family members want to dump all this real estate, and I'm going, wait a minute, it's a great hard asset. Let's not go to quick forced liquidation. Well, what happens when a multi-generational family doesn't have a proper custodian like Gannett that can execute and have proper trust documents drafted so that the will of the grantor is carried out?
It's a heavily legal process. Jim, how are you thinking about custody, ETFs, new entrants, existing entrants, and those that say, hey, I have my coins on Coinbase, what should I do? How much advice, or let me ask you this, from how many directions does the advice have to come from?
One, I'd rather have our clients have exposure to Bitcoin's price in any capacity than try to be a purist and say, hey, you have to buy Bitcoin, move it to a cold storage, multi-sig wallet, and they're not going to do that. Therefore, they'll never even get exposure. So while I am a purist, I'd rather at least get them started. Now, with that said, we certainly talk through the means of acquiring Bitcoin and the different ways of storing it and the trade-offs and risks. And we're always pushing and educating towards, self-custody, multi-sig, especially when we're looking at multi-generational planning. Just discussing the trade-offs there. We let them know, yes, ETFs are simpler, but of course there are pitfalls of the ETFs versus holding the asset directly. Just for instance, the wash sale rules, for instance. So talking through that, and it comes down to educating. It seems like a big hurdle to get through when someone comes to you not knowing anything about Bitcoin, but as anything related to this new asset, it's just a matter of helping them understand it from a base level and building up from there.
William, I want to ask you about multi-generational storage, because it's something that is coming into the conversation a lot with Unchained, and what I'm assuming now is a lot with Gannett, because these are families that want to make sure that hey, it's not just I who has the control of the key, but the specific legal structure so the children and the grandchildren can have custody when the time is right. So my question to you on that front is, is there some advanced Bitcoin transaction planning that can be done in terms of time locks? Is it Bitcoin native in the way that we're thinking about these things, or is it really a legal matter first here in 2025?
That is a very great, long, complicated question. I would submit to you that trust companies get bought and sold, and private equity is stepping in everywhere. And if there's a client that wants to make sure that their will of having it multi-generational, they want to ensure that it's going to be carried out by a stable custodian that is going to be there into the future. So you're going to get into trust law and rules and regulations associated around it. And passing it down is this is what I'm actually here to learn. And I'm actually here to actually give some insight into how we might transfer some of your Bitcoin wealth out of your taxable estate with discounts and using LLCs for the lack of marketability and minority interest that you give to your kids, and eventually divest yourself of your interest in your Bitcoin by doing a recapitalization, but maintaining voting control and giving up 98% so that the growth goes down to them sooner than later. The long term, if you're getting into the third and fourth and fifth generation, I think you're in the right state in Jackson Hole with Gannett Trust. I think, Matt, you were telling me that they've got 100 and some years associated with the length. The rule of perpetuity takes effect.
Might be
So-
1,000.
Yeah, say again?
It might be 1,000. I don't. They could speak to them more clearly.
I'm sorry, yeah, 1,000, yeah, excuse me, maybe I misunderstood you. So there's, those are the tough questions. And I need to learn more about it, and everybody wants to learn more about it and the long-term continuity of a trust company and its existence. And more importantly, its stability for the long term.
Matt, did you want to add something here on this idea of multi-generational custody?
Absolutely, and it's the fact that when you hold your keys, you effectively have a bearer instrument. Just is so it's so different compared to what most people are doing, where they have assets held at a custodian that ultimately you can't lose them per se, right? Ultimately, they're not going anywhere. So that continuity of having an institution that has the redundancy set up, maybe multi-institutions handling the cold storage keys for you in that regard, having possession of the keys personally, does that constitute that you have the Bitcoin and it's not a completed gift? They're all really interesting dynamics, and something unique to Bitcoin that I haven't really seen talked about yet is, and it goes along with what William was saying, ultimately, discounting is a pretty common practice. So if you're going to discount a closely held business to try to move, ultimately more value outside of your estate, you can't do that with publicly traded securities. Theoretically, you can't do it with just Bitcoin because it has a current, liquidity today. But I think bringing in something like time locks would allow for justifiable discount, because you're losing the ability to have the economic benefit now and into the future until that time lock expires. And I think that's a really interesting concept where, in theory, somebody, whether they have Bitcoin or not, could ultimately move a lot of wealth down to later generations through that $30 million exemption. They might be able to move theoretically $60 or more million into future generations. And there's obviously risk that between now and say 30 years from now, when the time lock comes undone, who has the keys and knows how to access the Bitcoin, right? So, but that risk is part of the reason I believe there's discounting available. And I think it's essentially a new frontier for estate planning that I bet you 90% of the estate planning market hasn't considered yet.
Well, before we were exploring the topics for this panel, I had not thought about this particular type of multi-generational custody situation, because it's actually highly tax regime dependent. in the way that you're describing these things. So Jim, I'm curious, you said something really interesting, which is if IBIT is the way to get somebody off of zero, why not do it? This concept of time locks for multi-generational custody is at the other end of the spectrum. What type of clients are you getting involved with from absolutely zero to multi-generational trust arrangements over Bitcoin custody?
Let me throw one thing in right quick when it comes to estate planning. An issue I think that a lot of people are going to run into if we're trying to get Bitcoin out of your estate. Obviously, when it comes to estate planning, we're going to deal with estate tax and cap gains tax. So I think what would be really important as you're forming a trust around this, an irrevocable trust specifically, I would encourage considering having swap powers involved. That way, if you have this high growth asset, we can go ahead and put that back into your estate upon the deathbed and have your beneficiaries receive a step up basis on that asset. So I think that's often overlooked because we're in a rush to get it out with these discounts, but not considering, the benefit of maybe getting a stepped up basis later on for future generations. Now, sorry, that was
Nick, can I jump in real quick too?
Yeah, please, absolutely.
Yeah, sorry. Just real quick, my 10-second intro. I'm a wealth advisor and director of financial planning at Gannett Wealth Advisors. So our clientele may be a little bit different. So we have a lot of clients that are deep down the Bitcoin rabbit hole. So a lot of people we talk to and a lot of clients we have are hardcore Bitcoiners, right? So they're in the self-custody. They have a significant portion of their wealth is Bitcoin. We have clients that have been buying Bitcoin since Mt. Gox days. So we have a lot of conversations about estate planning with these clients because one, they're going to hold on to it, right? They're never going to sell their Bitcoin or they never want to sell their Bitcoin. They've been through multiple bear markets. And a big piece that we talk about is just making sure people understand, there is a distinction between holding your keys, right, and having self-sovereignty with the Bitcoin, but then also the legal trust structures have to match up with that, right? And a lot of clients, what we talk about is, hey, we need to make sure that the right trust structures are built and that the Bitcoin that you hold in self-custody is titled to that trust, right? And a lot of people don't understand that piece of it, and why would they? Most people don't understand trust law. So we just want to make sure that above all, whether it's a revocable living trust or whether it's an irrevocable trust like we're talking about, making sure that those keys are held by the trust and not the individual. So if something does happen to me, for example, and if it's titled in my name, it's going through the probate process and it's the headache of that, right? So making sure that my Bitcoin that I have is titled to my family's trust. So if I die, right, my wife is the successor trustee in a revocable trust format, or if it's like a dynasty trust or for multi-generational wealth, that's where you can partner with someone like a Gannett Trust or a trust company that knows Bitcoin, have them hold a key, right? You hold a key, and then someone like Unchained could hold a key, or Casa or Swan or wherever you want to go. So I think that's the important piece, is just making sure that not only do you hold your own keys, right, but that also the trust structure matches up with what you're trying to do too. And I love Jim's point about the swap powers too. I think that's a really important point.
Thank you, Vaughn. It's
Hey,
so
Nick, can I
important.
jump in there for a second? Because there's something, I was the president of the private trust company of Ohio years ago, and I'm familiar with a lot of these concepts. And quite frankly, what I've seen is the disasters that can come from them. So if people aren't familiar with it, really where the situs is important, right? And it's not just the situs of the trust, it's the beneficiaries, it's the trustee. All of those things impact both the state estate tax as well as the federal estate tax. But one of the things, time locks is something I know about, but I will always wave the caution flag, maybe not to the hardcore, cold holders and the people that are sovereign, but for the vast majority of the people, if you do have a time lock of, let's say, 30 years, and let's just say this asset is X, and it goes to 1,000X, all of a sudden you've got an estate tax problem, and that estate tax problem might occur before this time lock unlocks. And what do? You're bankrupt, right? You can't actually execute it because you've got a lock on it. So as you go through this, the importance of working with qualified financial planners and insurance people, qualified trust professionals and qualified investment professionals that don't get too excited about a concept they heard at a seminar and go rush off and put it all in place, which we've all seen happen. It's exciting, but you really need to understand what the what the limitations are on any of these strategies. So you can ladder in different strategies, you can have different things complementary it, the swap asset is a good idea, except for that only applies to, assets that are under whatever the estate tax cap is. So for many people, it does apply. For a lot of people, it doesn't. There's a lot of complexities in here, and I hope we whet the appetite of the people to learn more and come to some of the panelists as well as the other professionals they work with right now.
Yeah, and if I can follow up on that real quick with the time lock thing. That's a pretty new, I shouldn't even say it's a new concept, but it's not for the faint of heart. Like, I personally wouldn't be time locking my Bitcoin. I don't think I'm technically qualified to do it. Just more as a concept, I'm throwing it out there as a possibility. You wouldn't want to time lock money that your spouse might need to run the house and pay for your kids to go to school. Like, we're talking about if somebody bought, 1,000 Bitcoin back when they were $1 a piece, and now they've got a massive problem as far as the state tax liability. And the longer they wait, in theory, if Bitcoin goes up 200,000, 300,000, 400,000 or more in the future, it's going to be harder and harder to get that money outside the estate. And then when they pass, if it's in their estate, Jim's point was very valid. You get the step up in basis, but the problem gets too big, you're also forced selling Bitcoin to be able to pay the government. So there's a lot of, this is something you need good attorneys, CPAs, and financial advisors who can think about the possibilities and how to solve the problem based on their circumstances.
Great. And Jim, I'm going to let you get the last word in here on this question, but I want to bring up something that Vaughn mentioned. This is the concept of title versus custody. Your hand on the keys and the title being a legal construct. Vaughn and I have talked about this on my show as well. It is the main takeaway in terms of getting people oriented with how to custody Bitcoin over a long-term time horizon or over generations, meaning to your children and beyond. So it's not the same thing as having a key and then saying, just writing in, or leaving a note to your family that, this is how you access it, right? There's the concept of probate, which completely shatters the idea that you can just hand your Bitcoin to the next generation. So people need to understand the basics, seek professional advice, right? That's what the concept here is, that these are professionals that work in these settings. You must seek advice for your situation. And there is no one size fits all with Bitcoin. So Jim, what are your thoughts on this custody discussion?
We certainly gravitate to encouraging self-custody. Generally speaking, especially if we're looking at multi-generational planning, it's usually going to make sense to bring in multi-sig setup for ease of continuity. What if you and your wife are hit by a bus and your beneficiaries or the executive of your state doesn't understand Bitcoin to the capacity that you do? It's nice to have that backstop of a third party there that can walk them through what is Bitcoin and how do we access it so we can go to your kids and grandkids. And just having someone else there for that time, I think it's invaluable.
Wonderful. I couldn't agree more. Education is important, just as important as the solutions that the professionals are offering. So people have to know how to use it and what it means. Vaughn, I want to ask you about life insurance and other life expenses.
Mm-hmm.
Should people be considering borrowing against Bitcoin holdings to fund either lifestyle essentials or something like life insurance, which can pay out multiple times the annual premium?
Mm-hmm. Yeah, so this is the million Satoshi question, so to speak, right? So, again, we talk to a lot of clients that hold a pretty significant amount of Bitcoin, but they don't want to sell, right? And they, like gold, doesn't create dividends, doesn't create interest, doesn't create cash flow. Your cash flow is the appreciating asset that you can, if you're open to selling, right, sell it in a tax advantage or in a tax efficient way, make the best choice for you, and live off your Bitcoin. But there's a ton of people that are like, hey, on X, I always hear, never sell your Bitcoin, never sell your Bitcoin. So Bitcoin lending is becoming more and more popular. We always talk to clients about the trade-off, right? So there is risk involved, right? We've been in a bull market now for so long, and especially if these clients just came in when like the ETFs launched or even a little before that, and they're taking self-custody, they've never really seen a bear market, right? In a real bear market, right? Not the April 30% sell off or whatever it was. And the issue becomes, and the conversation becomes, managing the risk through the LTV of the loan, right? And you don't want to get to the point where you're facing margin calls and liquidation risk when you're using this pristine asset as collateral that does have a history of going down 60, 70%, right? So it's all about, if you have 10 Bitcoin and you want, $100,000 loan or whatever the number is, it's just making sure that, okay, you're not posting your entire stack as collateral. You're keeping it under, I'd be curious what you guys would say here too, at least 50% loan to value, right? Probably even lower than that to withstand that bear market. And if, 125 this cycle was the top, and that's not my call, so don't call me a bear. But if we are in the bear market and we start dropping and we go down to 60,000, 50,000, whatever that number is, you want to make sure that you're not getting these you're not getting liquidated or even having to post more collateral, or worst case scenario, if you are, you have a ton of your Bitcoin stack that you can still post more collateral. So that's the first part of it. So we do have clients that use Bitcoin lending, that they've done it. You go into it, right? There's always the exit strategy too, though, right? Now you have this debt that's on your balance sheet, right? It is a loan, you're supposed to pay it back. And the thought is, well, Bitcoin keeps going up and everything's fine and, it's all sunshine and rainbows. But again, that's where the timing can happen too, right? Where you take a loan today, 12 months later, you have to pay it off. Bitcoin's down significantly. And if you have to be a forced seller of Bitcoin to pay off the loan, now you've lost, right? So to speak, you're selling much more Bitcoin to pay off the loan. So, or you can roll the loan if you have the collateral. So I know that was a little bit of a non-answer, Nick, but I would say it can make sense. It depends on how much Bitcoin the person has, how comfortable they are with that trade-off of posting some of your Bitcoin as collateral. And then obviously, there's only a few trusted companies that we would say go through a Bitcoin loan or use a Bitcoin loan with. And, Unchained is one. Obviously, there's a conflict there. I work with Unchained, but they do great work with the Bitcoin lending product. But there's a couple of others out there too that you can do it with. Specifically about the insurance, again, makes sense as long as you're managing that risk on what you're borrowing against with Bitcoin. And
Chris,
it's such an immature space too. Sorry, Nick,
no,
it's only going to get more and more mature as we go on. You're going to have banks coming in. You're going to have that free market competition that's going to drive interest rates down. That's going to make it easier to borrow again. So I think we're just, you said the term, we're in a transitional period right now with a lot of this stuff, and we really are. And I think in the next couple of years, we're really going to see this space really explode. And there's going to be a lot of different options out there for sure.
Yeah. Chris, in the past, I've written about how Bitcoin can act as a type of life insurance from a theoretical perspective in a portfolio. How are you thinking about the balance between Bitcoin as a long-term asset, life insurance, other fixed income annuity type instruments? How are you thinking about retirement and Bitcoin versus these other asset classes? And of course, guys, for the panel and the audience, the correct answer to all these questions is it depends, but. So it depends, of course, but go ahead, Chris.
Well, most of our clients are pretty wealthy, and they're not necessarily wealthy, heavy in crypto. They didn't get their money that way. But, most wealthy families, they've got their liquidity bucket, they've got their giveaway bucket to their heirs, and then there's the middle liquidity, if you will. And so as far as, the mathematical case for the compounding of Bitcoin works out to 18 or 19% if you don't, assume there's going to be this massive institutional asset shift and other things. Some of the people who are doing asset allocations suggest the annual compounding is going to be in the high 20s or even the low 30s. I think that insurance is an important part for, the short term, the intermediate term solution for the need to replace income. But if we all believe that Bitcoin and, a handful of crypto will compound in the high teens, then I think that can by itself become a significant part of your legacy as well as your potential retirement planning. So, the thing that I've experienced over time is when people are newer to these things, they get excited and they sort of go all in, and then they regret it when they top ticked it. Our advice is just to go in sort of systematically over time, look for the dips, and don't try to get rich too fast. It's going to happen if you're just smart over a 5 or 10 year period of dollar cost averaging into Bitcoin. You're going to make a ton of money. For the people who already have a ton of money, and you're worried about, or you consider what's going to happen, if you end up giving hundreds of millions of dollars to your children and grandchildren, they have a problem. So as you think about what this strategy is, don't just completely fixate on how much money you're going to give away or not get taxed on. Think about the impact of who's actually going to have it. So when you have a trust or a trustee, how are the kids getting educated to not blow themselves up when they run into a $50 or $100 million account that comes unlocked 30 years down the road? I just wrote a book, Money and Meaning, what I've learned from advising the very wealthy, that covers a lot of these things. So as this panel talks about it, I hope the rest of the guys will also talk about the impact that this huge amount of money, which will occur for those who own Bitcoin, how it's going to impact their family and how they should prepare their family for that inevitability. Back to you, Nick.
That's a great answer. William, I want to hear your thoughts on life insurance in the portfolio versus Bitcoin. Do you think that this is a relevant theoretical comparison?
I think that you're tiptoeing into the area, obviously, of premium financing. And premium financing is something that we do. You have to have a rollout strategy when you are using premium financing. When we are doing premium financing and we are going to a bank to borrow money, we may be pledging some of their securities, we may be pledging some of their real estate, and maybe we're going to Unchained and borrowing some money there. But if you can leverage it up, make the gift out to the irrevocable trust, and those dollars are guaranteed dollars that are going to be income and estate tax free, then the kids won't feel the need to sell that Bitcoin because they've got the other cash, or those dollars are then used to buy the Bitcoin and put back into the irrevocable trust. So it's not a one size fits all where you leverage your Bitcoin and borrow from Unchained and get stuck having with a call. You might borrow from several banks and Unchained being one of them, but leveraging it up and having life insurance outside the taxable estate is something that we do all day long, and we love to do it. And we don't work with just one company, we work with a lot.
It's a very interesting concept. Matt, do you have any follow-ups to William's comment?
Yeah, I mean, you should always make sure never to put your client in a situation where they could potentially harm themselves, right? So very valid points on, risk management. How much do you borrow against? And if you have other assets, should you borrow against them at a lower rate, given that the current rates to borrow against Bitcoin are much higher? But again, it depends on the client. If this is somebody who, again, mined 1,000 Bitcoin, back when Satoshi was just starting the network, and they've held it this entire time, and that's their entire net worth, what else are you going to borrow from? You either recognize capital gains or you use the asset in a prudent manner to be able to, again, shift some of that estate tax liability and the future growth outside. And the big part that again, everybody's in different stages, but I got young kids, I'm married. The last thing I would want to do is, having lived through the 2017 cycle and buying, like Chris said, top ticking it, buying it all the way down. The last thing I'd want to do is, if I passed away, have my wife have to sell Bitcoin that I ultimately had wanted to give to my kids eventually, right? So providing, liquidity in dollars for them to spend that, so they're not forced to go short at potentially an inopportune time, is really important. So it can allow you to stay long if done properly. But it can also, if you borrow too much and borrow at the wrong time without enough forethought, it could force you into a situation where you get margin call, right? So all of these things have to be done, with a lot of deliberation, with smart people that know how this stuff can work.
Yeah, we can't emphasize how important it is here to seek professional advice. Jim, what are your thoughts here on the concept of not selling, so using other avenues to fund, whether it's other investment products or to shift tax liability around?
I mean, the biggest thing that Vaughn touched on is, if you're going to borrow against it, making sure you have proper collateralization, or else you can get in trouble real quick. I thought it was hilarious, Vaughn, you said, I'm talking about a real bear market, not the 30% drawdown we had in April. Only in Bitcoin would we have those types of comment and be like, oh yeah, that makes sense.
Right. We're talking about the real stuff here.
Yeah. I'm assuming we're talking about life insurance. We're talking about owning it for the purpose of covering your estate tax. And we have to consider, well, if I die tomorrow, paying that premium for 1 month made a lot of sense. If I die in 30 years, we have to consider, well, if, let's say my death benefit is is $10 million. And we've had how much between now and then has Bitcoin appreciated? And what's the capital gain impact on that? And thus, even then, like, am I still covered from an estate tax perspective based off the premium that I have now and the capital gain realized at that point? So I think it's important just to recognize that this is huge. I don't know, and be okay with that. If we have to start with that, I mean, obviously all of us, we're taking massive guesses. What will tax look like? How will Bitcoin be treated? What will Bitcoin's price be like? And what will these other assets look like? It can make sense to bring in life insurance to this. I would certainly want to make sure our clients don't face a tax issue upon death, and that can be a good place to have this. But as Matt mentioned, are there other assets we could use that would allow for lower cost of borrowing? Our first place to turn is usually going to be HELOCs or home equity loan. So I would look at a proper order of operations of where you're going to borrow from to secure, if it's to buy other assets or if it's to secure life insurance.
Great. Now, I want to ask you guys, what are some of the tax implications that people should be thinking about that we haven't covered already today? Or if there's something additional to one of the topics, such as the estate tax itself upon death, are there any other tax implications that people should be thinking about, whether it's on a capital gains basis, maybe if it's even a political take in that you have an opinion on where capital gains are going in the future, overall tax rates are going in the future, and how people might be positioned. Is there anyone that wants to hop in here on that topic?
I would just say real quick, I think what's really interesting about this conversation is that, we're getting to the point now where most of us, when you say Bitcoin, you just assume, self-custody, you sell, you pay capital gains taxes. But you can own real Bitcoin now in Roth IRAs and traditional IRAs. So it's making sure you're filling up these buckets. If you're in just talking about Bitcoin specifically, not traditional assets, but if you can put Bitcoin in a Roth IRA, right, that's like the perfect combination. And if you have that grow over the next 20, 30, 50 years, whatever that timeline is, you're creating this opportunity for yourself where you have all these different buckets where you can then go sell Bitcoin in the Roth IRA and get that tax-free income. But to Jim's point too about, what's Bitcoin going to do over the next 30 years or whatever timeline, that's like the impossible question for us to answer. And, we're in this, I always kind of jokingly say our mission statement is like, we have 1 foot in traditional financial planning and 1 foot in Bitcoin, and we're trying to bridge that gap. And one of the conversations I have with clients all the time is, I have no idea what Bitcoin's going to be in 30 years, but Nick, to your point, that estate tax exemption amount, how is that going to change? And then what's Bitcoin going to do over that time frame? And someone that has, maybe significant wealth in Bitcoin today, let's call it whatever significant you want to say, right? $2 million in Bitcoin. If we're right about Bitcoin, that number could become $30 million very quickly, right? And you get to that estate tax exemption amount very quickly. And so we have to be thinking about like the estate piece of it, the estate plan piece of it very early, because you might blink and all of a sudden you got to start building these complex estates, trust structures out to be ahead of the game, right? And the game is quickly shortening because of Bitcoin's appreciation. So yeah, I just want to make that point about the Roth IRA, the traditional IRA, creating those buckets where you can have opportunities to create different tax circumstances for yourself, and then obviously think ahead with the estate tax exemption amounts too.
Mm-hmm. Thanks, Vaughn. Anybody else want to chime in here?
Let me just add to that. The one thing you can guarantee is that estate tax laws will change, and they'll either go up or down, and regardless of which side of the aisle you end up on, they're going to change. They're going to change in the individual states, and they're going to change on a federal level. The idea that's been put forward is a really good one about having different buckets, right? So the one thing, when we have an asset class like Bitcoin, which has an explosive possibility of value appreciation, the one thing I would caution people to do is not to say, oh, this is the best strategy. I would caution people to say there are multiple strategies, and it's probably a good idea to do a little bit in all of them, right? So there's the Roth IRA, which is great. Premium finances on a limited basis, I think that's great, depending upon where and what. Do you do a time lock? Great. Do you do Dynasty Trust, great. There's all of these kinds of things that are worth considering. And you need to really have a senior level generalist who understands how it all works, and an attorney who understands how it all works, and a trust company who understands how it all works together. Otherwise, there's a high risk that you end up doing something that sounds great, and guess what? The law changes, and it will change. Right now we have a very supportive administration. The next time, the Democrats get in, it's going to change, and it may not be better. It may actually be more severe. So just a caution to make sure that you do baby steps, do a little bit of a lot of these things, get good advice, and then you'll probably do real well. And if you do have a huge estate problem, congratulations. It's a good problem to have.
Mm-hmm. William, what are your thoughts about buckets and thinking about how certain tax advantaging should be set up?
Well, I've got 36 properties in Nicaragua, so I'm a little bit outside the box. I would say that offshore trusts make a lot of sense. Mass Mutual, if you're willing to put up $1 million worth of premium, and we're going to do business in Bermuda, and we're never going to repatriate the asset. So if we're really trying to get around some estate taxes, and you're talking about the high net worth client who can spend $1 million in premium, and he gets on the plane and he goes to Bermuda, he avoids the deferred acquisition cost of insurance, he avoids the state premium tax of insurance, and if you don't go before 90, you will go after age 90, and that trust will get funded. And Bermuda's a pretty stable place. So Gannett Trust, get an office out in Bermuda.
Mm-hmm.
That's a great point about offshore. Does anybody else have experience with that type of high net worth client that's looking to get tax advantage on their Bitcoin portfolios by seeking an abroad solution? I'm very curious.
Well, I mean, there's a couple things to add on that too. The solutions you bring to bear depend on the client's circumstance, and I think we have to just throw it out there because there's probably some people that are going to listen to this who maybe do have a significant portion of their wealth and might try to pull a Roger Ver and just go move abroad. And there's a thing called an excise tax. There's a lot that goes into this, and just assuming you can walk across the border and take your Bitcoin with you and everything's fine is probably not a good solution, quite frankly. And I agree with what Chris is saying. And the order you do things matters, right? You bought Bitcoin and thought this is all you're ever need. I want to take care of myself. Then suddenly get married, you have kids, and you have a house, and you plant down roots. Well, your concern should be first is, can I pay the bills today? Can I pay for what I intend to that's going to happen next after that, like my kids' tuition and whatnot? And then your wealth starts to accumulate. You then start thinking about, all right, what about the next generation? If you jump out now and say, I bought my first Bitcoin and I want to set up a dynastic trust and do all this, and you're probably doing a little too much too soon, right? But the plan's never done. You constantly adjust based on your circumstances. And then ultimately how Bitcoin ties into that is going to be a pretty big variable year to year with the returns as well.
Jim, as Bitcoin grows within portfolios as a sheer function of its performance and outperformance to other asset classes, how do you deal with the rebalancing question? This is a challenge that people have. As Bitcoin grows in the portfolio, the advisors want more diversification instead of less. This might be a Bitcoin market call answer, even if it's a long-term one, or it can also be just a planning question.
Goodness, it's a dangerous question to answer as well. It takes a lot of heat, no matter how I answer that. How we generally utilize that is we'll have a bucket of Bitcoin that we say, hey, we're going to pretend this doesn't exist for a decade, several decades. And then we'll also have a secondary bucket of Bitcoin and Bitcoin related proxies maybe that we will rebalance against. We have a lot of clients come to us and say, hey, I love Bitcoin. I fully believe in Bitcoin. I think it's going to go up forever, but X. What do we do because of that? And I think what we recognize is if you have gone down the Bitcoin rabbit hole, you're probably not going to offset the Bitcoin volatility by owning a 30-year bond fund. So what do you need to own in tandem with your Bitcoin to rebalance against, to manage sequence of returns risk, these sorts of things. And I think that's the most important part of this question is what is that ideally uncorrelated asset that still fits into your Bitcoin ethos, and making sure that, do we rebalance against that, or at least again manage for these 30% non-bear drawdowns.
And what is that asset, or what are some of the? I want to know. It's a great point.
I mean, so again, I would venture to say most of your clients who are super into Bitcoin probably don't want to own just QQQ in a line, in tandem with their Bitcoin, and they don't want to own a 20-year bond fund. So we run a portfolio. It's goofy. We call it Frankenstein because it's real weird and a hodgepodge of odd stuff. But it's largely gold and value and deep value, along with other opportunistic fund stocks, mostly ETFs. We are tactical with that. And again, we're saying, hey, if Bitcoin drops largely because of XYZ, not because of 51% attack, but because of a global macro meltdown that's longer than we want to last, and we start to dig into your Bitcoin, what should we own with that? And that's what's informed what we're going to own in there. Like I said, largely right now, it's a lot of gold and value stuff. I tell our clients, the goal of this is to massively underperform Bitcoin. That's why it's here. We hope that you don't have to use your long-term care policy as well, but we own it just in case.
Vaughn, do you have any thoughts on this idea that Jim posed of, well, if you have a 2-asset portfolio, and that's how I actually like to teach portfolio theory. If you have a 2-asset portfolio, what would it be? So what is that good balancing asset to Bitcoin in some of these portfolios?
Yeah, you're asking the tough questions, Nick. I also may take some heat for this, but when you think about, I talk to clients all the time. When you think about Bitcoin, like, you have to think long-term. And when I say long-term, we're talking minimum 5 years, but really we're talking 10, 20, 30 years, right? So when we talk a lot about barbell strategy, right? If Bitcoin is one side of the barbell, what's the other side of the barbell? And it's cash, right? US dollars. And this is where I might take some heat. It's okay to hold some US dollars for the short term, especially if we're thinking about, a client that they might be at that financial freedom because of Bitcoin, or they're in retirement and Bitcoin has appreciated significantly and it has become a big portion of their net worth, to say that, hey, Bitcoin goes through these market cycles and it makes sense to hold however much cash you're comfortable with. It could be 6 months, it could be 12 months, it could be more than that. I have some clients that have 2 years worth of cash, and they know that it's, you're losing your purchasing power, it's getting hammered, but it's also stable, and they know that they can pay their bills out of that while Bitcoin may go through these crazy cycles, right? So I would say cash is a big piece of it. I like Jim's answer. We also look a lot at like deep value or value ETFs or stocks that we reasonably think will be around, through bear markets, that we can utilize, or ones that have strong dividend performance, right? That you can build a cash flow off of. Another thing that's interesting too, that I don't know if we want to go down this rabbit hole, but what Michael Saylor and Strategy is doing with like the preferred shares, and they're untested in a bear. We're not sure what's going to happen there, but Stretch, STRC's like getting all sorts of coverage on social media, and if he can create something there that is a little bit stable and does create that yield, and I know yield is a dirty word sometimes too, that's really interesting to look at over the long term. But then just real quick to go back to the tax piece too, one thing that we talked to a lot of our clients about is gifting while alive and also death, right? But a lot of our clients are charitably inclined and using things like donor advised funds to gift, get that tax deduction, and then sell some of their Bitcoin stack if they do feel like they're too heavy in Bitcoin. Sell it, you owe the capital gains, right? You can redeploy it, but then you can put the gift on top of that to get rid of those capital gains. The big thing I always tell clients is there's never a scenario where you give $1 and save more than $1 in taxes, right? So if you're funding a donor advised fund, you're going to end up giving away more money than if you just paid the capital gains tax, right? But instead of giving it to the IRS and the government that we know is probably doing really smart, incredible things with our tax dollars every day, you're giving it to your church, your university, a Bitcoin development company, the SPCA, right? So that's a really interesting strategy as Bitcoin continues to go up, and someone that holds $1 million in Bitcoin goes to $300,000, and now that million is 3 million, right? And it's like, hey, we could shave off 50 grand, give it away. And all of a sudden they're like, yeah, that doesn't feel too bad because I just made $2 million on my Bitcoin position, right? So Just an interesting thought there around how to use donor advised funds or giving to family members too.
Hey, and Nick, can I just touch on Bitcoin? I mean, rebalancing and then get out of it.
Absolutely.
Everybody who's really rich on Bitcoin did not believe in rebalancing. And what I would say is the industry, financial advisory industry, kind of forgets about who the client is sometimes. And so depending upon who the client is and depending upon what their cash flow is right now, there may be very little or no need to rebalance. And I know, like the other two gentlemen said before, I might get in trouble. I don't care if I get in trouble. The way you really get rich is to hold on to your best performing asset for decades. And so whether that's, whether it's Apple, it's NVIDIA, it's Microsoft, it's, Altria, there's some of these generational winners that have compounded at really high above rates, average rate of returns for decades. So to the extent that the client has sufficient cash flow to take care of their needs, whatever that is, you could be really thoughtful about whether or not you really want to rebalance. And in my case, for a lot of clients that we have, they have very unbalanced portfolios because they have massive taxable gains in a handful of positions. So I'm just going to say it's not always a bad idea to not rebalance.
Thank you, Chris. Yeah, go ahead.
Yeah, if I could add one thing to echo what he says, it also depends. It's not just asset allocation, it's asset location, right? If it's in a Roth IRA and you're 35 years old and you own a couple Bitcoin in a Roth, okay, that's a different story, right? Versus if it's something you might need, get cash flow handled, you can pay your bills, but maybe in the medium term, maybe rebalancing is a little more appropriate then. But again, if it's gifting for like your children or grandchildren, do you really need to rebalance as much? Maybe not, right? And one thing just to think about too, a lot of the industry still does, still follows modern portfolio theory or efficient market hypothesis. And, Eugene Feinman and Harry Markowitz are, won Nobel Prizes for those things. I think the interesting component that people haven't considered yet is what's the bucket of assets they actually put in there to find out what your maximum return could be. If you actually throw in like Vaughn had said, distract the bottom instead of cash or money markets, and you throw Bitcoin on the other end, where right now I think the most risky assets emerging market, what's the efficient frontier actually moves pretty dramatically. So even in that passive allocation, it stretches the way things are being done and those assumptions where I think people need to go back to the drawing board and reconsider the new asset classes that are available.
Absolutely. People should definitely understand the underlying fundamentals to new instruments like STRC that are issued by Strategy and all securities that they might be interested in. I want to just bring up a couple things before I go to the next question. First, a lot of you have said, I might get in trouble for this and that, but it's based on your advice. And people need to understand that this is advice that they are giving clients based off of those clients' individual situations. So it might not fit into what everyone wants to hear, but it is based on actual conversations. I know that you're not just making up scenarios. You're dealing with clients that are either newly wealthy because of Bitcoin or are wealthy and then have a huge allocation to Bitcoin. There's all sorts of different clients, and the need to rebalance, or as Chris said, sometimes the desire to not rebalance and to hold those winners, because that's also a concept that I've understood for a long time as an investor, is that diversification is not the path to wealth. Actually, it's concentrated positions. And that's what Chris is bringing up here. I want to bring up one more thing, which is that Vaughn mentioned that in a global risk-off scenario, Bitcoin goes down 50% or more. What would you want to own? This is an important point that I want to bring back. It's not that Bitcoin is going to skyrocket if things collapse in the economy. That's not what Vaughn is saying. And I would agree with him from my research perspective, which is that if you get a global macro calamity, Bitcoin will go down, not up. It's not the safe haven that saves the world in a global macro risk-off scenario today. It doesn't fit that role. It's the opposite. And so you have to think about this. Doesn't mean Bitcoin won't become that. And that's a fun conversation. And, it's sometimes a tiring one, because I always like to say, and I can't project 20, 30, 50 years into the future. So, Vaughn, thank you for mentioning that, because that's really important to think about, that Bitcoin goes down if the world economy goes into a deep recession for sure. And that what would you want your portfolio to look like in that scenario? Do we have, and I want to suggest also that people put questions in the chat. I don't see any yet. If there are, then, please make sure that I'm seeing them. Oh, okay. I see them starting to come through. So I'll monitor that and ask those to the panel. But I want to ask you guys now about how RIAs should be thinking about Bitcoin beyond just a tactical position. So we had a Markowitz mention here and modern portfolio theory. I love that. So I'm going to bring that back. Are we post Markowitz? Are we post the efficient frontier? Has Bitcoin forever changed the game? And, more specifically, with your new clients now, are you embracing this post Bitcoin era of portfolio theory where just you have to explain to them, hey, the old rules do not apply because of Bitcoin? I know that every portfolio is different, but we are in a new game. William, what are your thoughts here on that?
So there was a takeoff on what Vaughn said about gifting. If you own some Bitcoin and it is appreciated significantly and you are charitably inclined, then you could equate it to a piece of real estate that you paid $1,000 for that's worth $1 million because it's on a valuable corner. But you're paying a lot of taxes on it. It's not generating any income, so you make a gift to the charitable remainder unit trust. The charitable remainder unit trust you get a tax deduction in the current year plus 5 moving forward. You retain a cash flow off of something that you weren't getting a cash flow on, and there's a benefit to the charity down the road. So it's a way of taking a non-income producing asset, avoiding the capital gain, generating income for yourself and your family, and benefiting the charity if there's something left down the road because you didn't take too much of a retained interest. I could get into grats, but you guys are all familiar with CRUTs, right?
Mm-hmm.
And I didn't answer your question, did I, Nick?
No, it's what I really appreciate, William, is that there's so many angles to this. And, I'm just a bond trader. And so I don't know about the world of retirement tax advantaging, because as a bond trader, you're supposed to assume no transaction costs and look at purely the market and what the market is telling you in terms of arbitrage. So, I really do appreciate the specifics here. I want to ask you guys a question that's been asked from the audience, which is, at what level of wealth do you advise clients obtain wealth advisory services? That's something that I think can be answered with a pretty easy number that doesn't have to be individual advice. So Jim, let's start with you.
We don't have an asset minimum to bring on a client. I'm less concerned with how much money you have or make, and more so concerned with the decisions you're navigating. Do you have the technical capacity, the time, and the desire to navigate those on your own? If you have to say no to any of those, I would say maybe you should find outside help. And that goes we have clients who have net worths of negative $500,000 because they're dual income, 2 spouses who just got out of med school for the last several decades. And we have clients who have decamillionaires, and both of them have lots of decisions they're navigating and want a guide to help through that.
Wonderful. And Matt, what about you guys?
Yeah, I mean, there's everybody has a niche that I shouldn't say everyone. Most advisors have a niche of where they work with clients best because of their capacity. I would advise you to find somebody where you're not going to be the smallest client, because then you won't get any attention, and you also don't want to be the biggest client because they might not be capable, right? So finding somebody who can give you advice based on your circumstance. If you need help budgeting, that's a different skill set than I have, right? But ultimately, there's a lot of very talented financial advisors who can help people get started. Whether they are familiar with Bitcoin or not, that's a different story. But I think that's partly what this call is about, is to try to help people in our industry be more educated about it, to start having conversations that aren't like, oh, it's tulip bulbs or whatever I'm sure the rest of you had heard before.
Chris, I want to ask you, because I know that you and Vaughn are going to see slightly different sides of the client base. Vaughn and I have talked about, yes, a lot of his clients are people that got into Bitcoin early, have Bitcoin, and want an advisory firm that's Bitcoin minded and Bitcoin focused. You said that you have a lot of clients that have built wealth in other more traditional ways. So I'd love to hear about your client base as specific as you can get. What type of Bitcoin allocations have your clients made? Why have they made them? Did they make them at what prices did they get into Bitcoin? And were they driven into Bitcoin because they already had wealth or had some specific thesis about Bitcoin? I'm curious.
Well, thanks. Our minimum's $5 million, but the question earlier is at what level? Vanguard had a nice report out about 5 or 6 years ago that says the value of advice, and by their calculation, the value of an advisor could be up to 3 percentage points per year. So even if you don't have a ton of money right out of the bucket, think about getting a qualified financial advisor, wealth advisor. To your question about my client base, I came out of the TradFi, if you will, right? I ran an ultra net worth business when I was at Smith Barney. Our average account was $100 million on deposit. This is 25 years ago. The average net worth was 250. So multiply that by 10 or 20 today. We had very, very sophisticated clients, and they got their money some way, right? Whether it's real estate, almost always running a business, but how they became interested in digital or crypto or Bitcoin specifically, quite frankly, in most cases, it was through me. And it's this forced education to help people understand, you got rich by, starting Juniper Networks, or you got rich by whatever it was that got bought out by whomever. And it was an emerging technology. So I describe Bitcoin and digital as an emerging technology. Bitcoin in particular has a fundamental use case to validate transactions. You could do 18,000 on a block every 10 minutes. It's going to be on a distributed ledger, and it will be forever one of the key ways people can record a transaction instantaneously, almost for free. So the fundamental use case for Bitcoin blockchain in particular is an emerging technology. So that's the way I talk about why people want to start off with a little bit. We started off 1.5 years ago, broadly speaking, putting money into clients' accounts through the ETFs. I learned about this through one client who's had, Bitcoin exposure back to 2013. So he was very early. He taught me about it. But as the clients get bigger and bigger, and your clients in particular, and Vaughn, what's going to happen, in my opinion, is we're going to have a lot of clients who are sort of regular clients to get wealthy by owning Bitcoin. And then there's going to be a handful of people that are going to get massively wealthy because of a concentration, or maybe they were lucky enough to buy 1,000 Bitcoin when it was $1. The idea here is to help people understand the full range and complexity of the issues surrounding acquiring it, managing it, keeping it, and then making sure that it is in the right location, in the right titles, and the access to it is appropriate, but also all of the unintended consequences that can come from this illiquid asset in these various structures, and then what it might do to your kids. So my clients, the vast majority of them have their net worth under 5% in digital, but in 10 years from now, it's going to be 5%. In 20 years from now, it's going to be 20%, because what I believe to be is this compounding effect that's going to happen.
Thank you so much for that, Chris. Vaughn, I want to ask you a question from the audience, from Chris. What's the best setup to make sure your family, who may not be technical, will be able to execute your estate in the event of your death? Is that a, what type of trust company are you hiring type of question?
Yeah, so there's 2 ways to look at it. I would say I talk to a lot of clients that are generally the husband, right? But sometimes the wife, but it's usually one spouse they found Bitcoin, they went down the rabbit hole, they set up the wallets. And then the other spouse is like, oh, that's nice. Like, I trust you, but I don't care to learn how to sign transactions and stuff, right? So the next question becomes, and what they come to us about is, hey, if I, again, to use Jim's phrase, if I get hit by a bus, right? My husband has no idea what to do. And then that conversation inevitably leads to, hey, there are services out there like Unchained, for example, Casas, Vaughn, whoever you want to point out, where you can set up your Bitcoin in a multi-sig solution, right? So you get rid of that single point of failure of a single hardware device. And if something happens to you, those people are there to help you or help the widow, right? Or the children or whoever you're referring to, make sure that they understand, here's what you need to know, here's how you sign the transaction, here's how you move the Bitcoin. And they're going to help every step of the way on that, right? So, and the thing I really love about where I'm at with Gannett Wealth Advisors now is that we're really connected to Unchained and to Gannett Trust, right? So we're here. Now I always tell clients, like, I know enough to be dangerous. So if we're really talking about, hey, your spouse just passed away and you need to move the Bitcoin, let's get you over to the Unchained team. They're going to help you move it. Now Gannett Trust, or any trust company that comes along that knows Bitcoin and knows how to operate here, can be that third-party trustee that's going to be able to take on that role for clients, that as we continue to get more and more away from the early Bitcoiners who are like, hey, I'm holding my own keys, I don't trust anyone to hold my own keys. And it's more the people that we've been talking about who have started accumulating Bitcoin. We go down 20 years and they don't really want to mess with keys. They're not like that libertarian or that, hardcore Bitcoiner. Using a trust company that can take on that fiduciary responsibility to be a key holder for you. And then the wife, the husband, the widow, whoever it is, the kids, they don't have anything to worry about. They just have what they need, the trust structure, the legal documents. They contact the trust company, say, hey, mom and dad passed away, help us navigate this and help us move the Bitcoin in a safe way. So I think trust companies are going to play a huge part in how this all evolves over the coming decades, for sure.
Great, thanks. And I want to go to Matt and William for your closing thoughts, given some of these discussions around how individuals are thinking about this and as they transition to individuals that have families and have to think about trust situations.
Yeah, I mean, I think there's a lot of interesting stuff going on. I know there's been some talk of Lloyd's of London getting involved and having, kidnap and ransom insurance and other things. If you happen to lose access to your keys, there's going to be a whole market, I believe, that will develop around those types of things. And there may be some people who say, I'd like to de-risk and just have some of it in ETF. There's nothing wrong with that. If you've built enough wealth and you want to reallocate to have a little bit of redundancy in that form, to have it at NFS or whoever, custodying that on your behalf or with your RIA, I think that's great, right? But one thing that you should always remember, and I think I heard this from Matt Odell or Marty Bent, is ultimately that if you don't know where the yield comes from, you are the yield. And so there's going to be a lot of different ideas that are thrown out, and you should look into them to see if, for instance, it's something that's promising you a growth in excess of Bitcoin, for instance, like, a product denominated in insurance that's denominated in Bitcoin. Just make sure you dig in, because you want to know where that yield comes from. And if you're being rehypothecated, you should always start there.
Thank you, Matt. William?
Can you guys hear me?
Yes, we can.
Yeah, okay. I think it's all about getting outside the tax system. I think it's inevitable that estate taxes are going up. I don't think we're going to stay at 15 million. We've got a tremendous deficit. I think that income taxes, the state taxes are going to go up. And I really feel that now is a very, very good time, because I use this concept all the time talking to my wealthy clients, that gift taxes are better than estate taxes. And they go, what do you mean? I say, well, I talk about the inclusivity or the exclusivity. They go, well, what does that mean? I said, okay, you've got $100 million. And if you died today and you've already used up your lifetime exemption and estate taxes are 50%, then there's 50 million that goes down to your kids. Yeah, I got it. But, well, let's talk about you giving that 50 million to them today. And then you choose to pay the gift taxes, which is 25 million. Well, you still have 25 million, which is more than enough to carry you through old and gray, and you don't need your long-term care policy. And your kids have already got 50 million, and then that growth is outside the taxable estate. So I would end on gift taxes are better than estate taxes. Get things done right now. Use your spousal limited access trust before things go away, and take action, because clients have inertia, and we are the ones that they look to that have confidence, that get them off the dime to take action.
Thank you so much, William. Vaughn, I'm going to hand it back to you.
Yeah, appreciate the time. Last thing I would just add, I think as Bitcoiners, we have to be okay to know that as the ETFs launch, a lot of people are probably going to hold their wealth in ETFs. But if there's one thing I could tell people on this call is the power of self-custody is real, and taking away the single points of failure and holding your own keys, holding your coins, and then holding those coins for future generations is what it's all about. So all this stuff we've been talking about, the estate planning and stuff plays a huge part, but self-custody to me is the most important piece about Bitcoin for sure. So yeah, I would just say thanks for joining us for this panel. Again, you can register for all events that are happening at GannettTrust.com. There's one coming up here next, I think 11:30 or 11:45 Central Time. So please sign up for that. Nick, thank you for moderating this panel, and appreciate the time, gentlemen.
All right.
Thank you so much, Vaughn.
Thanks, guys.
Chris,
Appreciate it.
William, Matt, thank you guys. I appreciate you. Jim had to bounce for a flight, and we thank him as well. And thanks to everyone at home who tuned in.